We got Cred on the line today. It's just the two of us. Thanks for being here with us. Before we get to the show, let me share with you about FTX, our partners for Weekly Open. Go to weeklyopen.com/FTX. You can trade there today directly from one asset to the other. It is easy on the FTX app. Of course, you can track your portfolio, dollar cost average in, dollar cost average out when you connect your bank and whatnot. Do all the things that you need to do on the FTX app. Thanks to them again for being our partners. Let's get to the episode. Cred, how you doing?
I'm well. I'm just disappointed that this is what happens to the market as soon as Don steps away for one day. You know, one weekend away with him not bull posting 20 times a day. It's just red candles and drippy price action. But otherwise, good.
We need those thousands of dollars of his devout followers buying based on his insinuations that number will go up.
Correct. Without that, we are nothing. Because no one's left realistically, right? It's just like everyone's been washed out. So it's just Don and whoever's left following along. It's also a big week ahead, you know, something I'm sure we'll discuss. But I've got the DB tweet, which, you know, we've got Tuesday, Google and Microsoft earnings. That's tomorrow. Wednesday, Fed, including press conference and Facebook earnings. Thursday, some GDP prints, some recession chatter there. Amazon earnings, Apple earnings, and some more PCE data on Friday. So, I mean, that's literally every single day of the week with some S&P or macro-sensitive stuff coming right up. Yeah. Far too much.
Yeah. And then on top of that, you know, this is one of the things that I just loathe seeing in a candle, you know, like the freaking the poke above and it just getting ruthlessly sold into immediately. That never goes well. I've seen this too many times. So one of those keep an eye on. If you're looking at BTC, and we can preview a bit with pricing, it wasn't as pretty because BTC was making lower highs while ETH was making equal highs, but still it had that wick of. But what's most relevant about it is it's also right at the 200-week moving average that we've been talking about so much. So it's like a just super clean rejection on that weekly close, right under the line. So it's got Bitcoin's got a lot of work to do. Whether you're looking level to level on lower time frames or looking at high time frame moving averages. We don't have to show monthly charts this week since Don's not here. So yeah, I mean, it's not you would have liked to seen a weekly close that kind of thrust it up further into this breakdown candle above the moving average, blah, 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 all the different things. So it's one of those where it's like, it was overall a reasonably good week, but it was a quiet news week because it was building up to this news week. And now it just makes everything this week more consequential. Anyway,
that's what it feels like, for sure.
That's my take on last week.
I agree with you pretty much. Quieter news week. Ethereum, the whole premise that we discussed last week of like Ethereum leading, and we all wanted to see Bitcoin catch up to some extent,
and
it didn't, right? And like at face value, just looking at that weekly chart, it's like that 200-week moving average thing. As much as we like to meme it, etc., it's still like a decent high time frame kind of where is the extreme or most aggressive selling going to end proxy, as it has been in the past. And what we had was, you have to look at it at face value, where we closed below it, we rallied, and then that's where the rejection came from, right? Like on its face, it looks like a bearish retest of that structure on the weekly time frame. So what I would have loved is, I'm fine with ETH leading, and then Bitcoin catches up, and then suddenly we're faced with a week where you've got Bitcoin and ETH both above the 200-week, and they're looking at breakouty, and both look attractive on a relative basis. And ETH BTC is kind of chilling at the mid-range, whatever. And you've got like quite a good picture for risk for 1 to 4 weeks or whatever period of time. But instead, you just have what appears to be ETH overshooting, Bitcoin kind of stuck at resistance and bleeding back into the range it broke out from, into a very kind of news-heavy week. And then that's kind of just not the setup that was on my radar. So I unfortunately have to continue the meme, and I haven't bought this thing yet, although maybe that's the most bullish thing about it, the fact that I haven't chucked my Degen Spartan stablecoins at it yet.
The entire market continues to be impressed with Cred's patience in the market.
It's easy to be patient when you've got $0 ledger, you know. It's like, I'm still doing nothing.
I'm not poor, I'm just patient.
yes. I should change my bio to that, honestly. That's so good. Oh, man. But I think the daily time frame is important, right? It's the one you've got up, and I can quickly screen share this as well.
Yeah, go for it.
The appropriate Chrome tab, I hope. Yeah, that looks right. So the basic premise was, yeah, the 200-week moving average, and that lined up with the top of the range, the highest closed candle here as well, all around 22.5 or thereabouts. And as I tweeted about, I think it was 2-3 days ago before this price action, I basically made a very short argument as to why the best range breakouts are the ones which essentially don't do this. The better ones are the ones that travel quickly and far away from price, because that shows you fresh momentum. It shows you short covering behavior. It reflects that market makers giving wider quotes or quoting less size in order to accommodate all the toxic flow they're being pounded with, or a lot of inventory that they think they might not be able to price appropriately. It just shows like aggression and urgency on behalf of all the participants involved, be it fresh buyers or forced short positions or liquidity providers, whatever else. That's why good breakouts are the best, right? You have this sense of urgency and a one-sided demand for liquidity that's very much concentrated around a single price, right? Whether it's new longs or shorts closing, that's the same order you're putting into the order book, right? And if that's all taking place around the same price and the quoting around those prices is much wider, that's when you get high price impact and number go up a lot. And that's what makes for a good breakout. What this is essentially the opposite of that, right? If anything, as soon as the market printed its first kind of breakout candle, this 19th of July, decent looking daily engulfing, it's just been droopy and pissy since then. And those are both very technical market structure terms, as you're well aware. Yeah, exactly. And you can see that, well, in general, this is your breakout point and you want to see momentum or at least acceptance, maybe just sideways at worst. So you either want I think if Don were here, and I love I'm talking about him as if he's passed, he's literally on holiday with his girlfriend. But if Don were here, he would say that no breakout, like kind of no retest is the best. But if you are going to retest, it should be just like very quick, very snappy, very aggressive on low time frames, and then continuation like in the very soon after. Instead, what we appear to have here on the daily time frame, if it closes anything like this, is just a poke above the range, acceptance back within it with no breakout, right? And in general, with range trading, when you have a poke above one side of the range that doesn't materialize, you got to target the other side of it, if not the mid-range to start, right? So that would kind of giving a rough version of that, unless this gets back above 22.5 or we get some sort of awesome daily rescue candle. With the headline risk this week, it's difficult to see that becoming immediately obvious. In any case, that leaves 27, and then maybe in if the range edge to edge type of setup plays out, the lows look vulnerable at that point. The final point I'll make is it's somewhat reminiscent structurally of, we talked about this so much on this stream, the Do Kwon breakout at 45K, right? Where the overwhelming argument is that this breakout is really bullish, but if it isn't really bullish, it's really bearish, right? And I think you can apply a similar logic to this one, where this breakout, where it's the first daily shift in market structure above the 200-week, it's the best thing ever, unless it isn't, in which case it's the worst thing ever. And it's kind of leaning towards the latter, unless this thing starts getting rescued sometime soon.
Yeah. Completely forgot what I was going to say there. I had something.
Sorry.
No, it's okay.
Was it about the range?
I got, no, it was about the timing.
Oh, nice. Yeah.
Just because these things always annoy me when you see it turn and it's like, legacy markets are going to close. So Thursday night, Friday, midday, something like that. Yes. Market starts to turn green. And then by Sunday night, it's like, well, don't want to be here when the real world wakes up. We have to have our parties on other days. So when I see a breakdown on Sunday night, it just means to me like there's a lack of conviction for crypto traders to be significantly participating when the real world is going to have its news and its own flows and all its stuff going on. And what we need is then the real world, the macro tailwind to reinvigorate crypto traders. And honestly, it's crypto traders that are really making anything move. It's not investors. It's not passive. It's traders that are convincing themselves that, XYZ has the potential to go up, which also leads into why I think that everything but Bitcoin had interesting moves, and Bitcoin's you can't really look at that and think like, oh, you know what, that last week was real good, like best day we've had in a while. Like he just there was nothing impressive about it. But if you get over to ETH and some other coins, like there were some days where if you bought somewhere in this range, you know, saying, okay, we got these equal highs, or I think we're going to break out a positive momentum. There was a real trade there, right? Like, even if you bought the breakout, if you will, like there was a 20% move in ETH, like buying the daily close after it finally broke through, like significant upside. And you just don't see it at Bitcoin. It just doesn't show up. You go across to the other coins in the world. I don't know which ones we want to look at, but like even, you know, AVAX.
You're gonna say MATIC.
Yeah, MATIC was better, but like AVAX has no narrative really, but it still had a reasonable move. Now it's back to where it broke out from.
It's such a nasty weekly close on AVAX as well, based on this prior weekly range.
I feel like AVAX, I mean, 3AC was so close to AVAX. Like if you're saying, you know, I want to play the layer 1 trade, or like stuff catching up to ETH or whatever, like whatever your narrative is, AVAX is going to be so far down your list because it just has too much of a 3AC hangover.
Contagion coin.
Contagion.
We need a new watch list.
Yeah,
just Contagion coin.
It is. Yeah, the Contagion coin watch list is a good one. So plus 60% on MATIC from the breakout, still sitting on plus 35%. And that's got whatever you want to call it, layer 2. What was their thing? Disney Accelerate. Who cares?
Reddit something. Just normally big brand integration.
Yeah.
Stuff.
Another one that I don't even have on my watch list, but I should because of who it talks about it so much, is Ethereum Classic. Freaking Hisaka trade, yet another one that I'm not in.
Of course.
And because what he's been doing is charting this relative to ETH, and like this is truly painful because we saw what happened with ETH. So if you're buying through that range, you know, Ethereum Classic proof of work coin is outperforming ETH significantly. So I'm sure this relative to USD, I guess we can look at it real quick, even though it's gonna
I love that we trade such efficient markets, you know.
Yeah, it's like proof of work ETH good. So, you know, let's just say you bought some kind of breakout there, you know, plus 60% versus Ethereum's like plus 20% or something. And that's much more impressive again on the daily time frame. And honestly, this looks like it actually still has some potential. I have no idea what volume is on this trade, but when Hisaka's tweeting over and over again about
you'll get enough volume,
ETC good, MATIC good, it's probably good. And like, that's probably where your momentum trades should be.
Oh, for sure.
Because that's the only people paying attention. Like if they're not following Hisaka, they're probably not even like relevant in the market. And it's just it's so reminiscent of 2018, 2019 right now.
It's true.
Anyway, so not exactly the most exciting finish of the week after a promising start of the week is, I guess, where we are. And now we're sitting here with this news flow freaks me out, and it's going to freak everybody out. And what are you going to see? Or what do you want to see, I guess? I mean, I guess it's not bad if you see open interest going down into this move, or if you see like short interest increasing or something like that. That would be the type of things that if there's any degree of surprise to the positive side or whatever, maybe there's room for crypto. I feel like that summarizes crypto a bit. Should we go LARP about macro stuff for a while?
Yeah, we can laugh about macro stuff. I think that'll be fun. On the crypto side, I just think it's going to be very much headline driven. And, you know, if you're chugging big positions into those with super tight stops, etc., it's probably like just not the best way to trade unless you're really experienced doing that type of thing. And I think it's also going to be telling to less so the news itself, more so how the market responds to it, because we're getting a lot of de-risking into the news itself. So it'd be interested to see who's willing to pick their coins back up once the headlines start to be more in the periphery. So that's kind of what's on my radar.
Most of the chats that I look at aren't like, ooh, you know what, we're going to get some really awesome news. It's like, have we already priced in a recession? You know, like whatever they do, the quarter-over-quarter growth. Or
you see the White House is on like damage control already, saying, well, technically economists have always defined a recession as 2 negative quarters, etc. It's they're in like cope damage control mode. It's just like the Putin price hike and everything else.
It's really unbelievable. Like
some pretty bad data as far as
they have a significant amount of PR power, and they're so bad at it. Like I can name like a handful of people in crypto who would vastly improve the White House communication system.
I could do it. Put me in.
Yeah, of course you could. It'd be on my list.
Oh, great. Yeah, some of the commentary has been embarrassing, but they do. I mean, it's just like they've sort of front run bad economic data before, like when they've said that the inflation is going to be a bit high before the official numbers came out, a few months ago. And now with the GDP thing, basically lambasting economists for how they measure inflation or the technical definition. They were saying, well, that's not necessarily the case, etc. So, they're not expecting anything too rosy in the near future, but it's politically sensitive given midterms, etc. So tricky time for sure. What have you got on our parabolic ledger episode of the dollar index analysis?
So depending on time frame, I have multiple like attempts at parabolas because I actually think this is one of those areas where they're just really hard to draw cleanly. I like this weekly one the most because it just touches it a lot. And I think no matter which one you're looking at, which way you're looking at it, in my mind, the Dixie parabola broke. That doesn't mean it has to like retrace the whole daggone thing or whatever. It just means to me like it's less likely to just turbocharge up further than it is to chill for a while. And even if it's like super bullish, I could imagine, one of these types of things where it hangs out for a bit, goes sideways, especially when you combine the actual news happening where like Europe's talking about hiking while the US has been, finally wondering like, have we done enough, 75-point hikes and can we go back to 50s? Was it who raised 50 basis points? Was it the UK or was it whoever controls it for the euro?
ECB is way too slow on this type of stuff. For them, like 25 is a big deal. I don't know the exact answer to your question.
Yeah, somebody raised by 50
behind the curve on this.
Yeah, somebody raised by 50 basis points, and actually the dollar was strong that day because they were like, "Oh, we thought they might be a little more aggressive." And all the Europeans were like, "Do you know us?"
Yeah, exactly.
But nevertheless, I look at this, and just on its face, it looks to me like it needs to chill. I don't really think that there's a lot of confluence to say like, "Oh, it's going back to the range lows. It's going to get absolutely wrecked." It's just it looks toppy. We're going to get a weekly close here in another 7 days. This monthly candle won't look great, and I could imagine the Dixie ranging between like high 90s and 110 for a long time. That at least gives you maybe a backdrop for chop elsewhere in markets. A strong dollar has just been really putting a lot of pressure on really every market worldwide. Yes. So that going sideways could be reasonable news for people looking at other things.
What do you make of the S&P now that it's up there? I think Don had a pretty ambitious bounce target, like much closer to the point of breakdown on like that monthly time frame. Pretty much that green candle you see before the breakdown was his lower high bearish retest type of thing.
Like up here.
Yeah, sort of the bottom side of that candle. But like a lot of this stuff has moved pretty meaningfully already ahead of a lot of the data that we're going to see this week. Like I agree with him structurally. There's more space for this thing but like the lower high reasonable area still has a bit of room to go. But I was thinking about this, even if like ETH starts to turn around, etc. I mean, if Bitcoin's stuck at the 200 week and ETH rallied, I mean, how much is it from the lows? It must be close to like 100% from high to low, right? It's like 85, 90%. It doesn't look like it from a candle structure point of view, but we've had some pretty sizable rallies, over the last month or so.
In ETH, you mean?
In ETH especially. Yeah. And I think that's what made it tricky is that in any other kind of downtrend, you'd say like a 90% rally, you would definitely treat that as like a, much closer to the top of that rally than to the bottom from a counter trend point of view. I think the thing that masked how well ETH did was the fact that Bitcoin kind of didn't do anything during that time. So it seemed like a very ETH specific catalyst merge, whatever type of trade, as opposed to a kind of crypto bounce more broadly in general. Don't know if that makes any sense.
Yeah, it does. And from the Pico bottom, that might not even be the Pico bottom because
it's like 90%, right?
Yeah, it's 90%, and that's
like a pretty big deal for ETH,
Yeah, that's a big. I mean, it's a reasonable move, and hard part is not a lot of people. The time between say 880 and 980 was very small. You did have plenty of time to buy under 1,000, but when you were sitting there in real life, like I don't know that many people acted on that. But that's always how it is in those.
Yes, of course,
scenarios.
by definition.
Yeah. So for the S&P, I still believe like this could chop around for a long time and just make it really frustrating for everyone involved. And that would coincide with some of my dollar views and whatnot. And you could be relatively bearish on the economy overall and also believe it still is at basically the current level, like 6 months from now, or more, sitting out this where my cursor is a year out. And if you scribble a pattern on there, it wouldn't shock you, right? Like it's kind of like what it was back here. Like the vol crisis of February 2018 is something that I like to talk about, where that really freaked out a lot of people after however long this was, like well over a year of just completely ugly candles. Like this was a recession earnings recession or something like that, like peak earnings. I can't remember what they called it back in 2015, 2016. A lot of people were scared. And then, the market went up only out of it and had a couple of months that were flat basically. But other than that, just like a steady grind up. Fall crisis happened February 2018, and it really put a lot of people on alert, I guess, if you will. And we still made these high highs, but then we made lower lows, and you have this gigantic megaphone thing out of it. If you count pre-COVID, post-COVID, or like peak COVID fears, whatever, before we turn the money printer on and then, go boom out of it. But in reality, when you look at from here to say here, like 21 bars of monthly candles, almost 2 years, where your typical market participant is going to be like, I don't know what happened then. Nothing. Like it was
yeah, no
irrelevant.
memories at all of it. Yeah.
Yeah. Like what you remember is I was excited about the market and then it tanked. And then, I made a ton of money in 2021, that kind of thing.
Yeah.
And people, I feel like they just always want to assign something having to happen very quickly when you can go out 2 years on something like this. And it may be a very large range, but I don't think it means like we're going to go down another 50% in the S&P or another 30% or whatever, downside target someone's seeking for the bottom of a recession. We could, but we could also take 2 years to actually get into that, and I'm not in any hurry to just throw every possible short on or that kind of thing. I think at best it's one of those where you just sit on the sidelines for a while, or you
tell me about it.
seek value, or you look for rotations or that kind of thing. And in that environment, we also all know that crypto does a whole bunch,
Yes.
So if every quarter crypto has like some pretty big theme with lots of potential moves. So if you're seeking out, I think I actually like your strategy of generally being on the sidelines, and then you seek out, when is there a trade for me where I ignore all the macro stuff? There's a temporary tailwind, and I look for like a short-term long, like a multi-week, but not necessarily a multi-month long opportunity. Yes. And I think you can actually stack some gains that way.
I think you can. I think that's reasonable. It's one of my, quickly on the S&P note that you mentioned, one thing that I'd like to see change in order to support the premise that you're going to get a longer consolidation, etc., is just on that very same time frame you've got. Man, that's a very clean and rather quick weekly downtrend, right? This is some baby pips type of thing on the way down with the lower highs and lower lows. Like, it resolves very quickly. It hasn't overshot like any market structure levels yet. It's been very, very, very technical and kind of systematic in that regard. So I would like to see a shift in that type of behavior, maybe like a failed breakdown that then goes sideways, or maybe a breakout that doesn't keep going higher and just falls back into the range. Like some sort of evidence that the baby pips downtrend is broken, I think would be a really good sign to suggest that, this thing is going to slow down a little bit.
So and when you say that, you mean like take this low, but it spends like no time above it.
Yeah, something like that. Yeah, because at the moment, all the breakdowns have essentially had meaningful follow through, and all the rallies have essentially made clear lower highs, right? Like one of those has to change in order to support the idea of a different pattern or a different type of rotation, whatever it may be. Just some more grindiness, because at the moment it's very sort of technical and very one-sided as well. So whether that's a failed breakdown to the downside or an overshoot to the upside, like something like that to suggest more ranging and more consolidation, I think will be pretty welcome, because otherwise you've just got like very in your face weekly downtrend and you're trying to buy crypto support for like the 4th, 5th week in a row. You know, it's kind of uncomfy. On the 20K note, my only reservation about 20K is the passage of time, as we talked about last week, just isn't enough for it to be some sort of V reversal or cyclical mega bottom that then takes you to like 50K or whatever. Normally it's pretty standard that we see not only price squeeze to the downside, but volatility squeeze to the downside as well. So after that kind of implosion event or whatever type of apex candle, it's a bit of a ghost town. And especially with crypto market structure as it is right now, where there's like a credit tightening within the ecosystem itself. And you know, firms recalling loans they've given to trading desks and market makers or whatever else. I think it's just lining up quite nicely in general for a period of constrained volatility. And as terrible as that sounds from a trading point of view, I think that's something to look forward to from a cyclical point of view, because that means you're much closer towards the end than you are to the midpoint or the beginning, you know? So I think 20K is like a very important, very good tradable type of level. So far, the bounce produced has been fairly disappointing. But I just think you have to look at other features of market structure, such as volatility and time and other things beyond just price, if you're trying to get like a larger cyclical view.
Again, I like putting the sideways version of things on there, and like no one's happy in that type of scenario, and that's more and more why I think I could believe it. For instance, this weekly moving average is going to probably move out in this kind of flattish, roundy way, because that's what it does. It's an average over time. So I could imagine the price like being unwilling to go significantly below 20K, but unable to get above these high time frame moving averages, and you get some kind of sideways where, you know, wherever it lands. And doing that for the next 6 months, again, would just make people really upset.
And they'd lose their mind as well as their balance, right? Because a lot of people, they're still not, or they don't have the tools to trade a reversionary type of environment or a range bound environment. So that's one of the things that gets you in these sorts of conditions. You keep trying to trade a trend because that's how you made all your money, and you're trying to make it back. And you apply your trend. There's no trend. You're applying the trend. You're applying trend trading strategies in a range bound environment. That's how you get whipped, right? And it works the other way around as well. If you're in a trending environment and you apply all your mean reversion range strategies, you get slapped as well. So it's very much an environment type of thing, and you can't squeeze from the market what's not there or what it's not willing to give you. At the moment, doesn't appear to be willing to give a trend, or even at the moment, very particularly large counter trend moves, which is difficult. But, you know, I guess lower your time frames or something, because the big boy weekly candles haven't quite come out to play yet, at least on BTC.
And to put that in context, like a lot of people lost more money here than in that breakdown.
Yes, 100%, 100%.
And again, on the opposite, these went up, but a lot of people lost money in that as well, the same way they did here, because they were waiting on this, and then it just kept kind of micro grinding, and they were paying extraordinary funding or whatever. It doesn't matter, like different reasons why they might get wrecked, but they got wrecked here, they got wrecked here, they got less wrecked when it actually did something that they could trade. But they were still trading. Trust us. Like,
I remember the 6K breakdown so vividly, and like the overarching, at least crypto Twitter consensus at the time, like the worst case scenario was, just a quick dip into maybe 5.2, or if you were really ambitious, you would say just like a wick, literally a wick to 4.8, and then you go back to like 6K, 12K, whatever. And instead, we got a brutal wealth erasing, industry threatening breakdown into just months of uncertain sideways type of thing. So historically, people who've relied on fast resolution to these things haven't done terribly well. So I think it's worth, whatever mental model you have for how long stuff is going to take, maybe at least give yourself a couple months of a buffer so you don't lose your mind completely.
Is there more of a myth in crypto that, other than like the demand that you must have a pure capitulatory bottom? Like everybody thinks every bottom needs to look like this, where there's only wick, no chance to ever buy that again. whereas there's more evidence of there being capitulation and then a lot of sideways that is the bottom. But people are saying during that time, like, no way, this can't be the bottom because you have to have capitulation. And it's like the capitulation was at the beginning. Now it's more of that, like,
this is the recovery type of thing.
Yeah, it's the signs of a true recovery.
Yeah, I wrote an article on this, which I tweeted out, which is, I wrote it back in March, which is conceptualizing capitulation. Like, what does this term actually mean? I think in most, there's some attempts to define terms, but in general, one of the more repeatable patterns in crypto is that you get a very high volatility event, and then it's followed by a very low volatility environment. And the capitulation is some sort of mixture of those, where even if you survive the high volatility kind of blow up candle, a lot of the time people who've done the hard part, they don't survive the chop that follows. And then by the time the rally actually comes, they're either wrecked or they're chopped up or they're in disbelief or whatever else. So it's the broader premise that gone.
Yeah, we've seen it twice now, even in this market. That's what the summer 2021 was, and this was absolutely brutal.
That was so terrible. Like, I remember that so vividly. Yeah. I mean, you just get capitulation on both ends of the volatility spectrum, right? It's like on the high end when you get the outsized candle, and on the low end when you look, it just feels like the market isn't ever going to do anything again. And both are good signal nonetheless.
Yeah. Now, it does not mean that you can't do this whole sideways, but then it turns out, oops, it wasn't recovery, and we will now retrend downside. It doesn't mean that. It just means that, like, after that, it doesn't mean you just keep trending down immediately forever. Like, that chop is going to take out just as many market participants, is going to put just as much money in the hands of the few as the, like, bleeding down candles.
Yes. Well, like, look at the top. We didn't have a blow off top for BTC, not like in the traditional sense. It was actually a very structural, very technical failed breakout, as opposed to some sort of, like, mental typical blow off top altcoin 2018 candle. We could potentially expect very similar behavior from the bottom as well, more kind of rounded structure based bottoms, as opposed to just like, okay, I see the big wick, let's go. There are no rules to this type of thing, especially when we're at the point where the whole industry is broken, basically, and everyone's dead. I don't really know what kind of rule book is applicable at that point.
Yeah, I mean, for BTC, it's much different for altcoins, but I really felt like Bitcoin's cycle ended with Coinbase going public, which is what this wick is up here. Coinbase went public right here, and to me, like, all the action after that, the recovery in July 2021, Bitcoin went up and it even made a higher high, just barely. But really, this was pathetic relative to everything that happened elsewhere in the market.
Yes, correct.
And it felt like a 6-month version of what happened in January 2018 in 1 month, like just this kind of dead cat scam bounce on all the other stuff, while Bitcoin didn't do very much.
And that was so ETF driven as well on the BTC side. Like, I remember CME open interest just completely ballooned in anticipation of the approval. And then I remember that I was sat in a restaurant watching the 1 minute chart when the approval news came through, and Coinbase spreads just got completely blown out and it looked hideous. And I was like, I see. Well, that trade is done, and then it just, from that point, it bled down. The only bounce you can see on that chart is Do Kwon trying to rescue the industry, and he buried it instead.
That's right here, right?
So yeah, exactly. It's literally been down only since the all-time high, and the little bit of up only we had just cost us more of the industry.
We definitely talked a significant amount about how, like, him being essentially your only buyer seemed really bad.
Yes.
Turns out.
That was so much fun on the show. We're talking about systemic risk always playing out. I don't think any of us thought it would play out this quickly or to this extent.
Well,
but yeah, it's just
if we actually thought that, maybe we would have been able to play it and made some money instead. We just coped.
We coped. Yeah. I mean, I was, thankfully not part of that whole structure, like the breakout trade or Luna or anything like that. But I think the valuable lesson there was, Bitcoin, and Don would say this as well, Bitcoin absolutely loves failed breakouts and failed breakdowns, especially on high time frames. Like, as far as pattern failure goes, that's going to be one of the best signals that you get in general when it comes to these assets. And they set for very nasty tops and kind of clear bottoms as well, and they're worth paying attention to. People asking about Don, do we think that Don just said he went on holiday but actually just sold and went AFK? No, he's actually on holiday. I think he's holding his stuff. I think he told me he might have sold some Sol at the range high to rebalance a bit before he left. But the rest, I think he's still got more or less, and he's on holiday. What do you think of this? I'm so uninterested in altcoins at the moment. Yeah, very clean, technically. But like, I'm just not interested in alts. Did you see that this Aptos new layer 1 blockchain like raised another 100 mil from like FTX and Multicoin? And I'm like, oh, we're doing this again. This is the L1 that scales. You know, layer 1 season. Yeah, I think the market's very tired of the old names, and there's reputational damage associated with the old names, right? Like Sol. Think about just Sol, Luna, Avax, Axie. Right, that's like the 4 horsemen of the bull market turned horsemen of the apocalypse. Solana's like went down a shit ton. The ecosystem got completely pillaged by CMS, Alameda, etc. with the Sam Coins ecosystem. Solana DeFi, just complete garbage. And the network itself just stopped working for like days and just wasn't a functional blockchain, right? Luna went to literal fucking zero 4 or 5 days in a row. UST holders wrecked. Do Kwon obliterated everyone.
0, 4 or 5 days in a row. Like
it's the cause of all the systemic risk and spillover in crypto. It took 3AC down with it. Contagion event set off, etc., etc. That's Sol. That's Luna. AVAX 3AC contagion coin. Like, you know, reputationally not so good, and side chains, whatever, doesn't matter. And then Axie. I think that was either the Ronin bridge or they got hacked and also went to zero, and GameFi is a piece of shit. Like, those are our heroes, you know, as far as the most recent bull market goes in altcoins. Those 4, just kind of going through them very quickly there, admittedly lazily and not particularly thoroughly, but those aren't narratives that are going to make new all-time highs anytime soon, you know? And that's why I think we're seeing new funding for all this type of shiny stuff in anticipation for when the bull market comes. You don't have the cynicism, you don't have the supply, you don't have the bag holders, the unlocks, etc. We found a new horse to bet on, and we like this one very much. Thank you. So I'm kind of on that boat where I'm just going to wait for the market to kind of clear up, see what the I guess hedge fund darling trade is of sorts, what new no bag holder horse they're going to back, and then play along. You know, very cynical, but I honestly think it's true, especially after how this market cycle unfolded.
One of the other things I need to see in that is whether or not all the upside was priced into the fundraise, or if it's still at a valuation that can be attractive for like a retail participant. And I don't know what that demarcation line is. Is it, hey, we're raising it a few billion or less, and it has upside of 10 or 20 billion from a market cap perspective? I think that's honestly what you need for these to have a chance. Is you need it to be cheap enough for retail to believe they can have upside too. Or else it just looks like a VC sell-off, like hedge fest of like who can you know what I mean? Like, who can get position to the short side to hedge the locked positions that they have. But yeah, it's really hard to get people excited after they just saw their net worth get obliterated by 90% for 10 or 12 weeks in a row.
Yeah, it's terrible.
I mean, we had a really nasty period there, and a lot of people, I believe personally, are underestimating just how painful it was, because there's some survivorship bias, like your friends who have gotten wrecked before survived this time, so you're expecting them to get wrecked again, and maybe they are off their highs, but they survived. But the people, the money came in when these were really, really hot, like most people weren't in here. They were in here and here and here. Like, look at all the volume on the weekly Solana on FTX. Like, the people were being distributed to from August 20, like literally from this point,
by the funds that Ledger's invested in.
Yeah. So like this is from a volume perspective when retail was absorbing bags of the hedge funds.
Yes.
And so these are the people, their cost basis is triple digit Solana.
Oh, it's like irrelevant in their mind at this point, right? Because like, it's so wrecked. The maths doesn't make a difference at that point.
Yeah, there's some way of charting. I can't really remember what it's called, where you actually show the price on this kind of volume weighted basis, so you can see like what your typical participant, like what their positioning is. So somebody's like, oh, it's still up like blah, 10x versus when it was on public markets, and who cares? That's not what the average there was no volume back then. There was no, that's not where people existed. And ARK is the legacy equivalent of this, where people are still pouring money into ARK, which is actually incredible. But but when people are like, oh, it's just back to where it was in 2020, no big deal. Like most people still have made a lot of money from before. And it's like, dude, nobody's made any money since 2018. And a lot of people have made or have
Oh, it's
lost a
shocking.
fortune
Yes.
from where the volume, look at that volume. Like it really picks up the literal top. Like that's where the volume picks up. February 2021.
Unbelievable.
And it was the Pico ass top.
Actually, it's very believable, right? This is what happens.
Yeah, it's completely believable. So, wick to wick, 78% in ARK. And you could say like, oh, this is ridiculous. Why is this thing up whatever 20% over the last couple months? And it's like, because it's still freaking wrecked and every single person is underwater. Like, and they're going to sell maybe very slowly and get bled out. But honestly, it's amazing. ARK is just the believers, like look at these.
If this ARK is going to survive, I hope Noah built it, mate, because otherwise, like, it's in trouble.
Yeah, I mean, with those type of inflows, this wouldn't surprise me at all, right? Like just a whole nother. Gosh, I could really imagine that scenario of just
a mirror type of.
Yeah, like what looks like accumulation, but I would not be bothering looking for upside in ARK for quite a while because I feel like it's going to underperform on a relative basis for quite some time.
Yeah. I think that's fair.
But that's an impressive amount of flows. Crypto doesn't have that.
We could use it.
Yeah, we could. If that was happening in Bitcoin, I'd be actually pretty impressed. But nevertheless, it just feels like everybody wants it to happen right now, and everything has happened really fast in these market cycles. And I just wonder and want to know your opinion. Could things just slow down from here? I want to give you the screen too. I've been hogging it, but
sure. I think expecting it to slow down is pretty reasonable. I'd find it very strange, especially, I mean, the nature of, as you pointed out on the AVAX chart, for example, like this entire move down has been absolutely mental, hasn't it? And you've just had, it's insanely one-sided, very short consolidation, ton of expansion candles, unambiguous trend. It's been very much like a clear trend and also a trader's market at that. I think some slowdown would actually be a good sign. Especially when it comes to just volatility compressing a little bit and coming in, whether that means establishing a new trading range or whatever else. I just don't want to see this rate of change continue because all the factors that are affecting the current rate of change, they all still look kind of rubbish and shitty, right? Be it macro, S&P, inflation, recession, strong dollar, commodities, whatever. It's like the bigger picture stuff aren't at the moment signaling inflows, right? So you want to see at the very least the market show a willingness to absorb the selling. And that can, from a chart point of view, just take the form of consolidation, right? Or the market being at some sort of value or whatever else. And if that means a slower market with a decently priced trading range, I think that's more than reasonable. And I think that's something to look forward to if we get it. I think short-term technicals, like at face value, I'm not a huge fan of this. Like 20K is still holding and doing its job. Like structurally from a round number and previous cycles level perspective. But if the best the 20K can do is take us to the underside of the 200 week and that's it, give us a failed breakdown on the daily, that's fucking depressing, right? Like if that's the case, if that's how this actually unfolds, then you essentially have like generational hedge fund lender exchanged forced selling, blow up, liquidations into a historic level, etc. And the best it can do is give you a bearish retest before like going lower. That's appalling, right? That's pitiful. So I think you want to see some sort of slowdown in conditions, a new range, or for the market to basically stop trending, because the levels that should be offering big bounces at the moment aren't offering particularly large ones. And if the trend keeps trending, then that just means like significantly lower prices. So yeah, I think, and in general, market cycles are determined as much by time as they are by price. And you just need time for the reputational risks to subside, coins to change hands as the meme goes, the cynicism to go away, new narratives to emerge, optimism to come in, the economy to look better, the luxury of speculation returning to the minds of normal households as opposed to worrying about like war, food, gas, their job, and so on. And all
I really like that. The luxury of speculation is a great point because that's really what it is. It's like you have time to worry about investments with your money because you're not worrying about the price of gas, or like whatever else, whether you have a job or not. it really is a luxury to be
Absolute
able
luxury.
to speculate. That makes a lot of sense to me. Yeah.
I mean, reclaiming this would be cool. That's my usual cope, right? So like, I think we talked about last week, setups where the market gives you a fake out, and then if it eventually gets back above the fake out level, that tends to be positive. I think you can apply something similar here. Like if this pushes lower towards the range midpoint or whatever else, if it eventually makes its way back above the range, I think it's far less likely that you get like a second bonk. And instead that ends up being your true continuation. These kind of double failed breakout setups are rare. So if this kind of follows through and it looks terrible, but like eventually makes its way back up, I'd actually be very willing to long this because I love those types of fool me once, won't fool me twice type of range high setups. But in terms of what's in front of me right now, it does just look like an overshoot through the range high and a backside retest to the 200 week until proven otherwise. Certainly if the daily closes anything like this. And, that's not terribly compelling from a purely Bitcoin point of view. And as I know, Ether's got different structure and whatnot. But for me, if I'm looking for like market-wide risk appetite, I need Bitcoin to at least play ball and keep up as a bare minimum, as a prerequisite before I start buying more speculative stuff.
23K-ish or so.
That's like 25, 22.5, 23, like basically where this overextension to the upside took place. Normally these failed breakout setups, especially if the daily closes like this, it would technically be a failed breakout setup. Once those quote unquote confirm, whatever that means, if it gets back above where that fake out took place, I love to do business. I don't even mind chasing in those circumstances, simply because it's one fake out, very common, two fake outs, very, very uncommon. So normally if it looks like it's going to go for it again and it closes above the level or whatever else, I look to punt that. But at face value, I'm entertaining hypotheticals. Face value, 200 week from the backside, daily looks like a failed range breakout. It's a bit, not what you'd expect from your generational mass liquidation levels and so on. And that's with the added headline risks and volatility that we know is coming this week. It's a bit, meh to be charitable.
Yeah, I don't know, man. The recession stuff kills me. It's like the biggest test of consensus to me. Like, it's such bearish consensus, and literally everyone looks at it and says like, "Oh, I believe a recession is coming."
If not, we're already in one, right? You mentioned that on a couple shows. But
I think that's the thing where people are maybe screwing it up. I think a recession is coming, so I will act now. And it's like, congratulations, you acted like 75% of the way into the price action. You missed it. And I don't, this is not an educated chart for me to look at, but copper sometimes helps depict these issues. 2008, it got absolutely hammered for 4 or 5 months. It's already on, like, copper's on its 4th down month, with 2 being really severe into I might as well call it a forever average. That's a 200-month average.
Oh my God.
It's flat over the course of more than 15 years, and sold off significantly after what it did with COVID. And the reason I'll bring it up is because copper, a lot of people use it as recession indicators, called Dr. Copper. But more importantly than that, to me, is just there's also a consensus view of the role of copper in like a higher EV environment, like the electrification of literally everything, all our vehicles and whatnot. Copper will be in significant demand. So there is, simultaneous to this many months of downtrend, also a pretty much guaranteed demand for copper over the coming decades that's more severe than it's ever had before. And I just wonder, like, did everybody just get out over their skis and they're now thinking there's a recession coming and we're about to print it? And like, is that basically not necessarily the bottom, but like we're closer to the bottom than to the top for sure in terms of overall price action, especially, just to add to this, when the recession, it may not be like a super turbo deflationary one like we've had before. And instead, like, you still have this kind of higher inflation, in which case real assets and hard assets are better to own, which includes real estate and stocks and commodities and the things that people are expecting to go to zero. And I just feel like we've all got it screwed up, and I'm not exactly sure how, or else I'll get really, really rich over the coming months, and I'm unlikely to do that. So, but I do feel like everybody's just expecting everything to melt down to zero, and it may not happen that way. what if our buying power goes down, but the number actually does okay?
Right.
You know, I don't really know. I don't know exactly. I just feel like there's this consensus doom, and makes me wonder if that's true.
I mean, there's a very high likelihood that we cock up the whole macro trade, you know, or the how markets are going to respond to recession risks and whatnot, because by definition, most participants were blindsided by macro in the first place. So what's the likelihood that those same participants blindsided by macro are then going to use that same thing that blindsided them to nail the bottom? Right? It's just like inherently an unlikely proposition. And, you know, as you said, markets are forward discounting or future discounting mechanisms, whatever. So you'd expect them to start to price in, you know, the worst of the worst should be some version of the bottom, right? When markets bottom on bad news, if you will, not good news. I think it's worth going back to a conversation you and I had in like January or something, where I essentially said, what we came to this kind of jovial, at the time it felt like jovial conclusion, which was long easing and then sell tightening, right? Or risk off tightening. And that aged uncharacteristically well for as far as contents in our Telegram chat go. But I think it does speak to a broader point that Powell and the Fed, they were pretty unambiguous about what was going to happen to asset class, like to you know, speculative assets or stocks or the market in general as a result of tightening, right? I remember you and I were sitting even in Austin, and also, you know, Powell was talking about pain ahead, and we were there joking over, I wonder what's going to happen to the market. You know, it's down 50% from that point. And I think you can expect something pretty similar on the other side, that, you know, just like the market getting crushed was pretty well telegraphed as far as the central banks go. And it was just a matter of believing them and positioning for it. I think we can reasonably expect something similar to the upside, that when it's time to ease and when it's time to provide support and when the conditions are going to shift. Now, it's unlikely that following that was going to give you the Pico bottom, but by hell, it probably means you're not going to fade the trend, right? And that's already a pretty good start. So I think if you take the macro stuff seriously, you kind of take this logical conclusion of tightening, number go down, easing, number go up. That's not going to give me the absolute Pico top or Pico bottom, but it'll give me enough, or at the very least, it'll improve my odds because I'm not fighting the Fed at that stage.
You know? And we really topped when they talked about the future of tightening, right? Like the narrative, like by the time tightening began, we were pretty well into the downtrend, because the actual, it's only been a few months, right?
I know, it's shocking.
So a signal on the reverse could be, let's say, how many months more can we do in the US, like 75 basis point hikes and continue tightening? At what point do they start saying, like, you know what, we've done a pretty good job here? And like when they say that, or they won't be that, but like they might say, like, you know, we're keeping everything on the table, looking at 25 to 50, whatever. Like somebody goes on CNBC and kind of leaks out the expectations,
or the Wall Street Journal type of thing, right? Their classic signaling
mechanism.
So
the rate of the hikes, the rate of the tightening, if that peaks, that could signal your bottom. Like the same thing. So you're essentially longing easing, but you're just easing off of the degree of tightening. It's rate of change, not necessarily like your hard number.
On and off switch. Yeah.
And all that takes right now is to go from 75 to 50, you know? And we could get that any month. We could get that this week. And if that happened this week, I think markets would absolutely explode. Because it would be a sign that, like, we think we caught up to it and now we need to like stay on pace or something like that.
Yes.
And yeah, anyway, I think that's very possible. And I think it's a very, it's funny too. It's like, yes, you know, we outperformed every macro fund because we bought when Jay Powell told us to, and then we sold when Jay Powell told us to.
Yeah, for sure. Sometimes people refuse to acknowledge that simple things can be effective because they feel that complexity is like positively correlated with returns. But a lot of the time, it's not the case with markets, right? Especially in crypto and other things. The fact that people still look at quite easy versions of line make boing, like Don does, for example, and come to some pretty robust conclusions. Sometimes the sort of simple stuff just requires you to be much more patient and ignore other things, and it kind of works in its own right. But yeah, I agree with you completely. It's just going to be a big week ahead, as we mentioned, you know, now that we're in the summary version, I think. lots of headlines. BTC, anything below where my blue line is to some extent, I'm far less into, because the available evidence would suggest that that's a failed breakout, or at the very least price wasn't accepted above the range high. So a weak Bitcoin for me isn't going to induce me into buying this thing. What could do so is either some sort of reclaim after the fact, whenever that may be, could be here, could be later, or whatever else, or some sort of failed breakdown at the range low, as a kind of a mirror setup to what you have here. So sometimes the market loves to form the same type of structure on both sides of the range. So it'll overshoot one side, make its way to the other side, overshoot there, and then you kind of, it extends the consolidation while the larger range comes to a resolution on its own. So that could also be something on my radar. But for the time being, this isn't exactly what I love to see, but I wasn't positioned for it either way. Surprise, surprise. So for me, it's very much going to be Walter Bloomberg terminal waiting room and seeing how Legacy reacts to all the earnings, Fed decisions, and so on, and then whether this forces a crypto any further. Still no big picture rush. I'm just hoping Don comes back in time to manage positions if he has to, and also because we miss him and he's our friend.
I imagine will be low volatility until he gets back. It's just
but yeah, that's going to be the classic Don thing, isn't it? Like he leaves at the volatility pico top, and then yeah.
He'll come back and be like, what were you guys stressing about? This price is the exact same as when I left.
And then it'll moon as soon as he's back. Yeah, it'll be very typical.
Yeah, I'm thinking in terms of the macro side of things, because I think we're just going to follow it, unfortunately.
Yes.
Hopefully we don't go down quite as much when everything else goes down, that kind of thing. Like we priced in a lot of our downside. That would be a good sign of your kind of whatever ice cream scoop bottom. In terms of earnings and what would interest me, it's less so about rates. It's more about like who's still profitable, like whose rate of change of profit versus loss is interesting, who's hiring and who's not in like all these big companies and whatnot. What are they throwing out there in terms of outlook? And start to see like what are things like in the real economy? Are they holding up a little better than everyone expects, or are they melting down and people are freaking out because they had no inventory for 2 years and now they have like infinite inventory because nobody's buying anything, and trying to eke out like what's happening in the real economy, what kind of rotation exists amongst companies, because that's always the impressive thing to me about the S&P, especially is, one industry gets battered and another industry picks up where that one left off. And how does that rotation occur? I want to keep an eye on that stuff, but that's about it.
I can't wait to stop caring about this ledger. I know.
Like I hate
honestly
the macro.
Can't wait. I can't wait to stop caring about this. I mean, it's been fun to be able to sort of shoot the shit and LARP about it, or have like a basic understanding of the terminology and so on. But it's going to be the next cycle's PTSD. Like traders who grew up trading the correlation or learned how to trade during the correlation days and during the Fed speak days and during the macro days, they're going to massively underperform the next bull market because they're constantly worried about what's coming up on Bloomberg or some sort of Dallas economic data or something, instead of just aping something that's breaking out. So I don't want to get too like overinvested in it or carry those scars forward into the next cycle. It's been a useful guide so far, but I honestly can't wait to be kind of over and done with it to a large extent, or at least for the correlation to like come down, or set periods of dispersion or whatever else, anything with this. Yeah,
I really hope we can either get away from that correlation, or we just need to find a new asset class that doesn't care. That was what was fun about crypto, right? It lived in the whole world. Yes. So we were just in the wrong industry again.
Victim of its own success, becoming that big. Yeah, well, now it's small again, so
Yeah. Please give us our own cycles and rotation. That's all we want. Don't make us care about the economy. We're too stupid for that.
Perfectly well said.
All right. Thanks everybody for being here. We'll talk to you soon. Thanks to FTX for being our partners. Go to weeklyopen.com/FTX. You can trade there. Dollar cost average in or out, whatever way you think the market's going to go. You can do it on the FTX app. It's easy. No fees. Do it all there. Connect your bank, all that good stuff. You can even trade stocks on the FTX app. weeklyopen.com/FTX. We'll catch you next time. Bye-bye.